All right, so up 20 and trailing now. This is a break short here. Whoops, here, where the prediction is failure, that the break will fail. So that means get long. I'm using a refinement to the entry, which is we require a bar closing in the direction of the signal, either on the bar itself, the next bar, or the bar after that. All right, so in this case, that's basically perfect. You're breaking low, and this is kind of why I built this particular verification bar procedure, because on these breaks we were seeing this happen, where the prediction is that the break will fail, but there's enough momentum in the market on the break that it drives into your stop, and then it turns. So interestingly enough, the replay testing shows that the normal entry is better overall across all codes. And I think an interesting avenue of research would be our different verification methods, different entry methods for different sets of codes. Is it worth doing that? So something to think about. I don't have time to do that right now, but that would be something to think about. Logically, it kind of makes sense. These either really aggressive codes or codes like this that are breaks or breaks. All right. Also, just in general, codes that I want to say codes that are in the opposite direction, but that's the whole point. Anyway, so there's something. Excuse me. There's something to do there. At this point, we're going to see if we're going to break through this overnight high or not. All right, so that was just over 10 points. Right, yeah, 10 points would be $200. So a nice little run there on the failed break. And only because we're using that verification bar 2 entry does that particular trade work. Right, the normal method would get stopped out just about to the tick and would be incredibly frustrating. And then the other method we were using was the next bar needs to be an up bar, and that's not the case here. So the more sophisticated logic worked for me in this case. The market action here seems much more normal than we've been seeing. Overnight range was less than 40. It was between 30 and 40. So, and it's behaving like that. So, if we continue to see that, then here's the daily chart. If we continue to see this range drop, then I'll start building models that are more for normal conditions than volatile conditions. All right. So, just in what we were just talking about in the room here is that we want to trail to that zigzag like that, as opposed to just a hard 20-tick trail. Or rather, that's what I think we want to do. I can't, I don't have the tool to test it yet, but I'm close. So, and just as we were discussing here, if you got in here, right, you want to trail to here. All right, a 20-tick trail is going to get stopped out like right there, just enough to really make you want to go, bang your head against the wall. This is difficult to do with native functionality, so I think I'm close to having it. We also, the next step after that is to be adding in here somewhere. So get in, survive the first pullback, and then add. Either add on a pullback just in general, or add because you get a new long signal, whatever that logic is. And now just continue to trail to the zigzag. So you notice it when it hurts. You don't notice it when it doesn't. So I need the tool to understand what's better or not, and then based upon that, we'll then add this. We'll go to the next step, which is let's do adds and then see how that works. In general, that fits the philosophy of don't limit your upside. That's, we limit our downside. That's what stops are for. And that's why we have a daily loss limit. But don't limit your upside. Let the market run. And so it's very clear from every single test, every single replay, and my own results, is that if if I set my target to 20 points, I do way better than if I set it to 10, even with my 20 tick trail, even getting stopped out before I'd like to. So don't limit your upside is the message there. So now we've got a short here off a pretty, I want to call it an aggressive trade. It's aggressive because to me it's not a trade I would be taking as a human. So I would be looking for the pullback here. Sorry about the noise, that's the printer. This code here says I see the pullback and I'm predicting failure. And so because it's a down signal on an up bar, we wait for the next bar and then get in at 708.25. The other thing to consider is we took a couple trades in here that get stopped out. Now the trade we were in earlier gets taken out what I think is too early, right? We want to be trailing to this level here and then to here, and then some amount, 30 or 40 ticks, a big amount, because what you want to do is you want to be trailing to that level. And so the point is that in addition to making more by staying in the trade, you avoid exposing yourself to new risk. So if you think about it, this was two trades that got stopped out, 10 ticks each. That's 20 ticks. You could just be trailing by 40 ticks instead. All right, it's a way to think about why you want to give yourself more room. Okay, and then as we watch this up more than 10 points now, and here we see again very clearly that let me fix that. Very clearly that we pulled back, got stopped out on a 20 tick trail. The market sets that zigzag level right there and then rolls over. So this is just basically what we're saying is we want to trail to the pullback. So we'd still be in the market here short with a stop in this area, right? I don't know how many ticks to put above that level, but and so we'd still be participating in the move, and B, we're not going to take another trade that exposes ourselves to risk here. All right, it's the end of the session now, and let's see what are my results. So 305 on the day. But what I've done is I've written the code here to trail to the zigzag, or rather to exit at the zigzag. So that's what these pink and blue lines are. So now we're doing a replay to see, and to test that, and then see how see what the results are. So here's the long, and now we're gonna we would exit now at that level instead of where we got taken out. And the important thing here, I think, is now we're going to exit at 98. We're going to avoid taking additional trades that can expose us to risk that we shouldn't expose. We wouldn't normally get exposed to. I have the target set way out. That's 20 points right there, so we would have just hit the 20-point target right there. But I want to test this, so it's going to come back here, I think. So the machine is starting to see the system's going to roll over, but what we know, because we watched it happen, is that these signals are too soon. And now I think we're gonna get out here at 705.75. Yeah, okay, so it exits correctly there. And so now the question would be that second trade, how does the market, how does it handle that? So let's look at that. The other thing to think about while we're waiting for that to happen is, really the next step here, assuming that I get all any bugs worked out with this trail method here, and then I need to do the testing, right, to see that is it actually better or not, as opposed to just my human bias in the memory, remembering the painful times and not noticing the times where it's better. The next thing to be doing is adding. So we want to, having gotten in down here, we want to add on that brake right there, or on that pullback. All right, that would be the obvious choice, and then start trailing with that zigzag. And that's the way to really clean up. All right, you start off with $50 of risk, and then you add, you get profit in the trade, and you add, and then you start trailing to the zigzag. And then you just, you keep carrying contracts. And up to however many. Okay, so we're filled, so now we can speed this up. Okay, so we move to break even, and now we're just gonna trail to the zigzags. It's not going to move the trail. What's actually happening is we're just internally monitoring this level, and then when we cross it, we flatten everything. Actually, I guess it is. It's trailing by 80 ticks is what I have it set up for. The target's set for 120 now. But what we expect to see is we don't ever actually expect to get that. If we did, we'd be really happy. All right, so yeah, when it popped up here, let me pause this now. When it popped up through there, it exited at 94.25 instead of getting taken out, way up here at on this little pullback here. So a little bit better in that case, but clearly working correctly, which is what I'm after. Okay, so I need to do some more testing, and then we need to run some replays to see does that actually work better or not, and then the next step is to start working on the ads.